Hello everyone, welcome to Freedom with Finance. Are you one of those aspiring long-term investors in Tadawul who never found sufficient data on how to split your portfolio in terms of risk and returns? If then come to the right place. This week, I will continue from a Tadawul foundational series to deep dive into the individual Tadawul stocks and show you how to categorize them into risk and return buckets. Today's video took a bit of data crunching as there is quite limited access to good quality data like we have in other advanced countries. So if you like this video, kindly appreciate my efforts with a single click of subscribe button. Today, I want to be covering three key topics. One is what is large cap, mid cap, small cap stocks? Second, how does this categorization of stocks link to the risk and return of a portfolio? And number three, how can retail investors like us use this categorization to define or design their portfolio? So let's get started quickly. So the first question is, what is this large cap, mid cap, and small cap categories? If you recollect from my first video on basics of Tadawul, link is on the top right. Market capitalization, or what is referred to as the cap in this equation, is an indicator of how big is the business that has been accounted, also with the optimism of the investors. So if I take the example of Apple, which is listed on the New York Stock Exchange, there is around 15 billion shares of Apple liquidated at the moment on a price of 170 US dollars, which gives me a market cap of 2.7 trillion USD. 15 billion into 170 USD, close to 2.7 trillion USD at the time of this recording, which makes it one of the largest stock in terms of the market cap across the world. Now, being valued at this 170 USD has an element of optimism from the investors also accounted to it. It doesn't mean that Apple is actually truly has a value of 2.7 trillion, but it means that the majority of the investors believe that that's the right value. And sometimes we tend to overvalue and sometimes we do undervalue it. And that's where investments and the ups and downs of market cycle comes into the picture. And that's why I said that market cap may not be a true indicator, but it accounts for that optimism or pessimism of the investors largely about that business. Similarly, with the same logic, if I were to calculate the market cap of Google, it's simple. There are 12 billion shares of Google listed on the exchange, and each of them currently is valued at close to 125 US dollars, which gives it a 1.5 trillion market cap. Let's go to how does different stock exchanges categorize their companies or the listed stocks into different segments, right? So let me start with the New York Stock Exchange, which is one of the oldest stock exchanges in the world. Being the oldest also means that it's a much more mature market, and a lot of companies have been listed here, almost 3,000 companies, right, that have been listed here, which also means that there's a huge variety in terms of the small cap, medium cap, or the large cap and mega caps that is available on the stock exchange. So as per the stock exchange regulatory board, the large cap companies are those that are valued between 10 billion to 200 billion US dollars. The ones that's above this $200 billion is referred to as the mega cap companies, which only exist in the New York Stock Exchange at the moment. And this is where the MANG companies, right? Meta, Amazon, Apple, Netflix, Google, all falls under this mega cap. Followed by the large cap is the mid cap companies, where you have those valued between 2 billion to 10 billion, small cap between 250 million US dollars to 2 billion US dollars, and followed by which you have the micro cap, which is those below the $250 million market cap. If I were to now go to the National Stock Exchange India, as per their regulatory board, which is the SEBI, they have categorized them into three categories based on the market cap. The large cap is the top 100 largest companies, which accounts to close to the market cap of about 2.4 billion US dollars. The mid cap are those in the next 150 largest companies, that is 101st to 250th of the largest companies listed on the stock exchange. And the small cap is the next 250 companies. So basically the 250th to the 500th largest listed companies based on the market cap. So what I did here is to track all the entire 228 stocks that are listed at the moment, at the time of this recording, on the Tadawul index, across the Tadawul all share index. Right? There are 228. So those are the 228 that you will see here. I have tagged them under which sector do they belong to, what is the company name, what is the listed price at the time of this recording on 20th of August, how many shares are available on the market for trading or for investments, depending on that, the market cap in terms of millions of Riyal. Then you have the market cap in terms of the USD, millions of USD. what is the total market cap? So in total, it's currently Tadawul is capped at almost 3.1 trillion USD. So how much is each of these stocks compared to the total? So what I did here is I identified a logic based on how the New York Stock Exchange has tagged the listed companies into, based on the market cap, as well as how the National Stock Exchange listed them into the rankings, right? The top 100, the next 150, the next 250. I applied a combination of that logic to tag the top 15 to be under the large cap, which contributes to 90% of the entire market cap. The next almost 30 of them is tagged under mid cap, which contributes to the next 6%, right? Followed by which you will see the next almost 75 of them to be tagged under small cap. So in total, what you'll see is almost 120 of them is falling under the large, mid, and small, and the remaining would be like the micro cap stocks, which is very small in nature, therefore very high volatility, super high in terms of risk. So ideal is something that you're having a majority of your portfolio coming from these 15, and followed by the mid and followed by the small cap. What you'll see, if you remember the first video which I taken, right? Saudi Aramco's market cap is close to 2.3 trillion out of the 3 trillion US dollars. So it close to 70% of the market cap is just because of Saudi Aramco. Followed by which you have alrajhi at the second highest market cap of 77,867 million US dollars, followed by Sabic, then SNB, then STC, Maden, etc., etc., right? In the mid cap, some of the ones that I can find is the Al Bilad Bank, you have the ANB, Americana, you have Etihad, Mobili, you have Kingdom, Jabal, Yansab, Tadawul Group, Savola Group, which is a parent company for the Al Marai. Okay? Now, and in the small cap, you will see some of them like the Al Arabia, Riyadh Cables, Imar, Catering, some of the ones that I've seen, like the Fitness Time. I see a lot of Fitness Time centers, in close to the place I live. What else is extra? A place where we can shop all these electronic companies. You have the Saudi German health hospital chain, right? So some of these are falling under the small cap, and then you will have somewhere less than 500 million US dollars. You'll start seeing the extremely small micro cap companies. I also wanted to create like another view of this. So let me zoom out a bit. Okay. So this is what I've done is like these are all the sectors that you will have on Tadawul listed, and how are they split between the large, mid, and small cap, right? So of course, large cap is where majority of the energy sector, banks, materials, utilities, right? So almost, as I was saying earlier, like almost 85% of the kingdom's market cap is still relied on the energy, which of course makes sense, but potentially, we will see a little bit more coming towards telecommunication, food, beverages, software services. Interesting thing that you should clearly, learn from this is how it is comparatively safer to not bet or invest in these sectors at the moment, right? Again, this is my philosophy. I am not a intraday investor. I'm more of a long-term, low risk or medium risk appetite investor, and therefore my preference would be to avoid, companies which are listed under the hardware, equipment, consumer durables, which may not be rational, because more and more people are, upgrading their lifestyles. More and more expats are coming here, so of course the durables and apparel might start increasing. But at this moment in time, stocks under pharma, biotech, transportation, consumer, none of them are in the large cap. Majority are also not there in the mid cap. They are either in the small cap or even not existing in those, right? So they are minor businesses at the moment. So even if you're investing in these sectors, make it a point to have like a comparatively small proportion of it, maybe 5% or 10% of it. Majority at the moment in the kingdom is more around banks, utilities, materials, energy, telecommunications, healthcare, food, beverages, right, which is more coming up and has a good proportion in large and mid, which should be something that you can consider. This gave a view of companies by their market cap, and also my approach of how I would categorize them under the large, mid, and small. Now let's try to understand, why is this categorization important, or how does this matter to us? And this is where I want to come up with a characteristic matrix, where I will be comparing the large cap, mid cap, small cap across 3 or 4 dimensions, which is growth or the return potential, volatility, liquidity, and risk. So if I were to start first with the large cap companies, being naturally the biggest of all the ones listed on the stock exchange, these are the ones which are very stable, right? And they grow steadily over the long period. And therefore, because they're such huge in terms of businesses, it's natural for them to grow steadily, but also at a moderate level. So you cannot expect, you may not see that frequently large cap companies like Google or Meta that will be growing at 59, 60%, right? CAGR. They comparatively grow at a slow rate, but steady, and therefore put them under the moderate category. In terms of volatility, because they're stable and big businesses, only apart from very exceptional cases, like for example, on the New York, there we had Enron listed, which was a massive, utilities company, which due to certain scandals, had a lot of volatility and then almost became bankrupt. So if you exclude those special scenarios, majority of the companies in the large cap will show low volatility because there's a large pool of investors who are investing in large cap, likely the institutional investors, large corporations, even governments, right? There is higher liquidity because there's always high demand for large cap stocks. And therefore, the risk is also low because these are stable businesses which have been tried and tested across decades, across different economies, etc. So from a Tadawul example, this would be examples of Saudi Aramco, Alrajhi Bank, Saudi Telecom Company, etc. Now, if I go to the mid-cap company, naturally, these are the ones in the middle. They are not too small, but at the same time, they're also not that big, meaning there is still opportunity for them to either explore new markets or there is opportunity for them to launch more products, etc. And therefore, they have a higher growth return potential compared to the large cap. Volatility will be slightly higher than the large cap. Liquidity will also be slightly lower than the large cap. And therefore, the risk is also higher than the large cap because these are companies not very small, which means that institutional or large scale investors may try to invest in these companies, but at the same time, because they are still being tested in different markets or they're still testing their own products, there will be volatility as compared to large caps. And this is where you will have the Jarir bookstore or the Tavunia or Mobili, which is Etisalat. Etisalat, yeah. Now, if I then go compare the small cap companies, of course, there is huge swings that you will see in the small cap companies. They are very small in nature. They, a lot of high risk investors will put their money into these small cap comparatively. In terms of liquidity as well, almost none of the large cap or institutional investors will invest in this, right? Because it's high risk. Right? You will clearly see a lot of examples where small cap companies can in a year give you plus 30% returns and the next year can give you minus 20% returns. And there's a lot of ups and downs that you will see, a lot of sine wave cycles that you will see in these companies. And therefore, people typically do not invest. They're cyclical. They're more cyclical than the large cap and mid cap. And therefore, over the long period, more than SIP way of investing in small cap, there is different philosophy of how to invest in small caps. You need to try to understand the cycle of those industries rather than doing a long-term SIP. You will get better results if you can understand the cycle. So it's different, right? The way you invest in a small cap will be very different from the philosophy you apply in large cap. Investing in large cap is comparatively easier. Even if you're consistently putting money every month in an SIP, you can still attain a good compounded return as compared to a small cap, where because they're more cyclical in nature, trying to understand what is that cycles where they can grow and what is those cycles where you should avoid can give you even a much higher return. And from Tadawul, some of the examples I could think of is the Hershey food chain or the Sasco utility company or the retail chains, right? So in this way, you will get a sense of what to expect from each of these classes or categories. And it's not a fixed categorization, right? A company which is small cap, maybe after 10 years might become large enough to be a mid cap. And then after maybe another 5 years, it might become large enough to be a large cap, right? So companies move from across these categories. They can go upwards and they can also come downwards, right? As the example I took about, Enron, right? It was a large cap company which slowly got delisted and became bankrupt. General Motors, right? Another large cap company that slowly started getting devalued as technology changed. The company was not able to keep up with that pace, and slowly, they also came down, right? So every quarter, at least in National Stock Exchange, the NSE, you'll see every quarter this list is being revised, right? A lot of the some of those borderline large cap companies can fall to mid cap, or some of those top mid cap companies can get promoted to the large cap, or same between mid cap and small cap. So what is an ideal mix that you typically see in a retail investors portfolio? Some of the literature, as well as some of the successful investors, long-term investors, what they have recommended is a good 60 to 70% of your portfolio being in your large cap stocks. Again, this completely depends on the risk profile of the investor. For this scenario, I'm assuming investors who have comparatively a moderate to low risk profile, who would prefer not seeing returns going down by minus 50%, minus 40%. They typically would prefer to have a stable, consistent, moderate return, like between, maybe 5% to 10%, right? Which is what you see in the large cap stocks. So a large cap stocks portfolio of between 60 to 70% of a total portfolio, mid cap stocks, which is somewhere between 15 to 20%, and then small cap stocks is 10 to 15%, right? Consider that money that you put into your small cap stocks is those which you're okay to even lose almost 70% of that money. You're okay to lose that much amount. You need your mindset is that that money is something that you don't care, how much it goes to, because it can go easily both ways. So with that mindset, if you're able to allocate between the large, mid, and small of your Tadawul portfolio, that would be the ideal, split that people recommend. So I hope you like this video. It was a small introduction, something that hasn't been, that is not easily available. At least when I was doing my research, I could not find this categorization of Tadawul stocks between the large, mid, and small cap, and it did take quite a bit of data crunching and data extraction, from multiple sources to get this categorization. Hope you like this video. Please do subscribe, press the bell icon, and do like this video.